Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 4th of August. Starting off with the FTSE 100, where we had that bull trap through 83.71, the old June peak, and come back basically just below the floor of the rising trend channel there from September. Below that at 8200, looking for a retest of that red May support line projection, currently pointing around 8060. RSI now back below the neutral 50 level after a bull trap for the RSI as well through the 55 level. So double bull trap there. Worst case scenario now is that we have to head down to the April support line projection and the 200-day moving average area at 7850, which, if you believe all the gloom and doom in the papers, is where we're heading. But ideally, we don't go any lower than that red line there from May, and if we're really lucky, just go back into that range between 8200 and 8400. Onto the DAX, which was the leading indicator on the downside for this week's breakdown. We gapped down on Friday and stayed down. This market looks as though it's sniffing out the 200-day line there, 17,400. And I think that's probably what we're going to look for. Early and end of day close back above the high of Friday around the 17,900 level would render the whole move down a bear trap rather. And up we would go back again. But at the moment, really the 200-day line, the place to look for. The Dow is next, and here, despite all the gloom and doom, we're still just about hanging on to the 50-day moving average area, 39,500. At least while we're above that, we still have the chance of zigzagging up to the top of that rising trend channel from this time last year. But it has to be admitted that there is the risk now of a move down towards the 200-day line and the old May support there at 38,000. So while we're below the middle of the M formation, that double top there at 39,800, there is the risk of a move down to the 200-day line. Going on to Bitcoin, which has been rather sickly of late after the failure below the resistance line there from March. The risk now is that we have to head to the floor of this rising trend channel from back in October. That's around 57,800 before we then head back up to the higher levels at the top of the range near 70,000. Worst case scenario now, I suppose, that we'll have a meeting with this line here and 50,000, but I think it's a bit early days to look for that, even though the 50-day line is falling quite rapidly at the moment, near 62,700. On to gold, which I think initially had a good reaction to the non-farm payrolls on Friday, but did drop back. Here, though, we're happy that we're above 2450, the old April-May resistance, and the longer we stay above that, the greater the chance of a move to as high as 2600 by the end of this month. Although, I suppose if the equity markets fall, then that does also eventually damage the gold price. Moving on to the stocks, and the cupboard relatively bare, as you might imagine, with the soft end of the week for the markets. Starting with Altyn, which is a success story, a decent rising trending situation. Here we're just on that target line that we had there from last September, around £1.65. End of day close above that, we could have a new leg higher to the top of the overall rising trend channel from September, £2.20. Maybe by the end of September. But the key here is, I suppose, staying on the right side of £1.50, really. On to ADVFN, which made an unlikely rebound on Friday. Here we hit our target there, or at least temporarily, around 23, 24 pence. Came back from that, but looking interesting in the sense that in this market, very few things rise by accident. Current situation is that we can get through 24 pence, then we could have a new leg up towards the 36 pence area, the upper parallel of that resistance line from last summer. And I suppose the other thing to note is the way that the company has 6 million in cash on a £10 million market cap, so there is a bit of money sloshing around. We don't want to see the shares back below the old resistance there from December, around 19 pence. On to Botswana diamonds, and here we've broken this resistance line there from back in January, and we've pushed above the now rising 50-day line, so that's a double win for us. Looking for the shares to hit the top of that rising trend channel from December as high as 0.62 by the end of next month. Obviously, the 200-day line there at 0.41 is a barrier, and we haven't been above that since basically this time last year. So probably that's the first thing to look at. If we can break that over the next day or two, then we'd be more certain of 0.62 by the end of next month. Another rare outing, and in this case it's Craven House. Just worth looking at the overall pattern here from the beginning of last year. Got a rising trend channel there from back in January 2023, and the view now is that we could head up to as high as 50 pence at the top of that channel, backed by the way that we've had those very solid candles, and hopefully we'll stay on the right side of 30 pence in the meantime. On to Hercules, which manages to keep itself in a low profile, but the performance this year has been actually rather stunning. I think we can see the shares up nearly 100% since January. This stock a play on the infrastructure gravy train that we have in this country, and the shares approaching our initial target here at 49 pence, looking for up to 62 pence by the end of September. Given the latest breakout through 42 pence. So the longer we stay above 42, the greater chance of 60 pence plus. On to Metro Bank, which I suppose initially with the spike higher this week looked as though there might be a takeover for the company, but actually it was just news of the company potentially returning to profitability, which is quite a novelty for a bank these days. We were looking for support to come in at 50 pence. The longer we stay above that, the greater the chance of move to 85 pence. The idea is that this is a mid-move consolidation, so 35 to, let's say, 57, and then mid-50s to mid-80s. And I suppose the other thing to note is that we're hoping that the shares will rise up to the 85 pence area in a mirror image of the way they fell from 100 pence to down to 35, 40 pence last year. On to Mkango, which has got a decent setup, a technical setup here with a bear trap gap reversal, one of our favorites, largely because it tends to work, and above the old March support there at 5.25, looking for not only a retest of the recent resistance at 7.5, but ultimately up to as much as 11.5 pence by the end of next month. But that bear trap gap reversal looking quite attractive there. Mosman is next, and here the shares regrouping after the rug pull with a triple top near 0.08. Current view is that while we're above the floor of the rising trend channel there at 0.05, we're still looking for a retest, hopefully fourth time lucky on breaking 0.08 and then hitting up towards the 0.1 pence level. But not quite out of the woods there. We want to see as much price action as possible above the 0.55, 0.56, 0.05, 0.06 level. On to UCOG, which is the star of the show at the moment. Here you can see that we've got potentially a V-shaped bull flag ready to assault the 200-day line now at 0.12 successfully for the second time. If we can get through that, then it would be a move back to January resistance of 0.22, but it has to be admitted. At the moment, that seems a long way away. Ideally, though, we stay on the right side of 0.06 in the meantime. If UK oil and gas can go up, one could imagine that even Versarien could go up. And as first positive noises in a long time here, we had a double gap down there for the shares last month and a gap higher on Friday. It was rather sort of weak close there, but still we have that bear trap island reversal. And the longer we stay above recent support there around the 0.065 level, the greater the chance of at least an attempt at retesting the main resistance here above 0.12. Finishing off with a stock which I haven't looked at for years, which is WeCap from the Aquis market. Here it does look like we've got a meaningful turnaround. We had a sideways shuffle above a rising 50-day line at the end of July, and we've just had that step fashion rise for the shares, looking for the top of that broadening triangle there from March, as high as 1.25 pence maybe by the end of next month. But I think that this is the first meaningful turnaround for the shares since, well, basically for nearly 4 years. So it's definitely a change in sentiment. That's it for me today. More updates tomorrow.